has said that there's no guarantee of a COVID vaccine yet. There are 47,000 new cases being reported in the United States. But Brazil, meantime, which was a big hotspot a couple of weeks ago, has finally witnessed a dip in COVID cases. Okay, let me introduce now on the show Anil Sarin, the CIO of Centrum Broking. Anil, thank you so much for joining us today on ET Now. 10,400 and climbing for the Nifty 50, this after a great quarter as well. What do you make of this recovery? Globally, cases are rising. The US as well is seeing a continuous rise in cases in some of the other states, Florida, Arizona, etc. And that in turn is raising question marks on when USA will, sort of emerge out of this recession, or rather the emergence is going to be much more delayed. But for India, are we looking inward? Are we looking at our own statistics? Are we concentrating purely on the fact that rural will bring us out of, the misery that this lockdown had plunged the Indian economy in?
Clearly, I mean, as things stand today, and you were talking about the tractor and the other, rural-related numbers being better than expected. So yes, it's going to be over there. Even some of these other companies which have operations both in metros as well as in upcountry rural areas, they are reporting that apart from the metros, in the other places there is a good, if you talk to retail companies, they say that there is a good amount of footfall. Not as much as it used to, but yeah, the buying per person who comes in is higher, so there is an intent. So clearly, I mean, as many people have commented before me, that India is divided into 2 or 3 categories. So in certain areas, there is a strong demand impulse. You can even call it pent-up demand, so one has to be selective while looking at investing in this market. Those companies that are going to benefit from rural, or those who have a national footprint where there is a higher proportion of rural, certainly those would in the short term perform better.
But Anil, it also begets the question that after so many months of a lockdown, this the spike in demand that we are witnessing, what's to say that this is not simply, like you mentioned, pent up demand, and that eventually it'll all die down as the weeks progress. And if that is the case, then would it even be wise to sort of pick up big chunks or invest big monies in the rural oriented names or in the pan India oriented names?
I think you're making a very important point. Not only is this, at least I suspect it is more a case of pent-up demand, and it's going to moderate. I won't say completely peter out, but yeah, it should moderate logically. That is one aspect. But the bigger aspect is that the markets are held steady by what is happening in the US, where there is incessant money supply, which is driving up the prices of financial assets. And what is happening in India is, to a great extent, a reflection of that. So, I mean, there are 2 risk aspects over here. One is, suppose for whatever reason things would go, unbalanced in the US, and the US markets were to fall, what happens to India? And second is that, are we drawing too many conclusions from this short-term or so-called high-frequency data, which is emerging in the rural and the pan-India names? So one has to be careful, no doubt about that.
What's your view on financials, Anil? No longer can we look at financials as a whole basket, right? It's divided into several segments. You have PSU banks, you have private banks, you have home loan oriented, NBFCs or HFCs, of course, and then you have gold loan companies as well, right? I mean, we've seen what a Manappuram and Muthoot have done, perhaps having to do with the fact, maybe a loose correlation with what gold prices are doing. So is that the right way right now to look at financials? How would you look at financials?
See, by and large, the market is very intelligent. So if they are distinguishing between these separate segments which you outlined, there is a method to that. Most importantly, I mean, as you mentioned about the gold, Muthoot, etc., they are trading at all-time highs. No other banking and finance names would be trading at all-time highs. They may be rebounding from very much lower levels, but for sure they are not at all-time highs. But Muthoot, etc., are at all-time highs. So that sort of tells you what is the correlation with the price of gold and what is the expectation of the price of gold. That's one part. The other is that the second phase of moratoriums are much lesser than the initially announced moratorium. So the market is taking heart from that. And the third is that you are having to contend with this franchise value argument that, all right, fine, it is a bad time and there is going to be a lot of bad loans coming forward, especially at the end of the second quarter, where as we emerge from these lockdowns, a lot more pain is in store, especially for financial names. Yes, that being said, the weaker ones would sort of fall by the wayside. So there is this increasing market share of the stronger ones, and the franchise value argument that, all right, once things are normal, how are you going to deploy your money? India, as you know, is not a great R&D power. It is not a great, commodities-led power. A lot of growth before COVID struck was coming from BFSI, and one suspects that post-COVID situation normalization, financials will once again, especially private banks, especially well-managed NBFCs, would once again, start showing good numbers. So some of the buying that is happening is due to franchise value-oriented buying. That being said, it is a risky time to be, going after these names after they have rebounded by, 40-50% from their March end lows.
Okay. Got it. All right. Thank you so much, Anil, for joining us today on ET Now and on the newsroom, and just sharing your thoughts on this nice rally that we are witnessing in the equity market.